What is volatility? Forex volatility is the measure of overall price fluctuations over a certain time, how rapidly a market's prices change in the Forex market, and it is merely the standard deviation of returns. Which Forex pairs move the most? The most volatile Forex pairs, or Forex pairs that move the most, in the last several years are exotic pairs and then GBP cross pairs, such as GBP NZD or GBP CAD, etc. The least volatile currency pairs are EUR CHF, EUR USD, AUD CHF, USD CHF, and EUR CAD, etc. Volatility is not always bad, really, because it can be an opportunity in trading. There is a difference between risk and volatility. Volatility is not the same as a risk because volatility is merely the standard deviation of returns and risk, and there's a chance that an outcome or investment's actual gains will differ from an expected outcome or return. Do not forget to subscribe. Please take a minute and look at a whiteboard for a moment. Let's learn some more stuff.
Exotic currency pairs are most volatile, and most moving pairs, such as USD SEK, USD BRL, and USD DKK. Cross rates such related to GBP, such as GBP NZD, GBP AUD, GBP JPY, and GBP CAD are the currency pairs with the highest volatility too. This cross pairs move for more than 200 pips per day on average. List of most common traded Forex pairs with highest volatility. AUD Australian dollar versus JPY Japanese yen. This currency pair is volatile since the value of the AUD is inversely related to the JPY. The price of the AUD is related to the value of the Australian exports of metals, materials, and other items, making it a commodity currency. The Japanese currency is preferred by investors when there are economic problems, making it a safe haven. So the value of this currency pair fluctuates rapidly depending on the outlook for the world economy. New Zealand dollar, NZD, versus JPY, Japanese yen. The value of the NZD is linked to the agricultural exports of New Zealand, making it a commodity currency like the AUD. Some of the major exports are honey, meat, eggs, and wood. Any change in the value of these commodities will affect the currency pair. British pound, GBP, versus Euro, EUR. Following the Brexit, the volatility in the pair has increased. This could decrease in the future. Canadian dollar, CAD, versus Japanese yen, JPY. The value of the CAD depends on the price of oil, making it a commodity currency, while the Japanese yen is a safe haven. British pound, GBP, versus AUD, Australian dollar. Since Australia is a member of the Commonwealth, the British and Australian economies are historically linked. The price of the AUD is closely related to the Australian export value. There has been a decrease in Australian exports to China, increasing volatility since the United States started its trade war with China. US dollar, USD, versus South African rand, ZAR. Gold is one of the major exports from South Africa and is priced in US dollars. The volatility of this pair depends on the price of gold, with the exchange rate increasing with a gold price increase. USD, US dollar, versus South Korean won, KRW. The KRW was formed after the Second World War and trades at 1,000 to 1 against the US dollar. US dollar versus Brazilian real, BRL. This currency pair value is frequently fluctuating, making it popular among day traders and other traders with a scalping strategy. USD, US dollar, versus Turkish lira, TRY. After the failed coup in 2016, the Turkish lira is extremely volatile. There are major changes in Turkish politics and society, resulting in fluctuations in currency value. Hence, traders are closely monitoring the currency pair due to uncertainty involved. US dollar, USD, versus Mexican peso, MXN. Due to the increase in disputes between the countries and change in tariff rate has resulted in an increase in volatility. A Forex trader should be, hence, well versed with Forex currency pairs and should know about what factors make currency pairs volatile and which Forex pairs move the most. That will ensure some certainty, stability, and most importantly, some peace of mind to you.
Hello traders, this is FX Hero from YouTube channel, FX Hero YouTube channel, and right now we're watching Forex Screener. This is the special part of the TradingView website. Excellent tool. And just I want to tell you, this is the free tool, and here you can monitor a lot of things. First, in this video, we're talking about exotic currency pairs. We said that exotic currency pairs are quotations that consists of the one major currency like US dollar, euro, British pound, Japanese yen, and so on, and one currency from a developing country like Turkish lira or some other, for example, Mexican pesos or something else. And we said that exotic currency pairs are less weakly than major currency pairs and usually more volatile than major FX pairs in the foreign exchange markets. And right now, we can set, very easy, just go there in the filter section, you can pick exotic currency pair. You can pick major, minor, all, but right now just pick exotic. Here you can watch, for example, 5 minutes, 15 minutes, 1 hour, 4 hour, 1 day, 1 week, 1 month. I just set 1 day right now. And right now you can watch everything. You can see, for example, as simple moving averages, a lot of indicators here, but the most important thing, you can pick here what kind of strategy do you watch, what you want to trade. Exotic currency pairs are excellent for trend following strategies. In my article down in the YouTube video, you can read science research papers about that. I found 15 science research papers in the article. Just put several of them. If you want to research, just go to Google Scholar or some other science research directory, and there you can realize a lot of statistic papers, and they talk about exotic pairs are very, very good for trend following systems. So just pick here trend following systems, and here you can get ideas, strong sell, strong buy, buy or not. You can see what is the most volatile currency pair right now, and so on and so on. So just try to analyze this. This is my recommendation, and I hope you will be happy. I wish you a good day. Bye bye.